Hey, good afternoon, everybody. I hope you're doing well today. Here we are with another Sunday video covering an educational subject that I think is value to the world of financial services. But I want to start this out by asking you a question. Have you noticed something strange lately? Look, the headlines feel bearish, but honestly, the markets don't. Small caps are acting well, indexes are holding near highs, and risk assets aren't breaking down. But if you scroll the news, you'd think we're on the edge of a cliff. And that right there is why people struggle to buy low and sell high. Before we go any further, I'd like to remind people that I am a financial advisor, but this is not financial advice. I am not your advisor, and this cannot be seen as financial advice. I do give financial advice. If these subjects are something of interest to you, click on the link below at themarketforge.com. Also, I put together a PDF that helps folks understand how I look at markets so that you can have a similar viewpoint. It's called the Blueprint. Feel free to download that. That's free. But look, the news reports on how people feel, right? That's what builds interest. That's what gets clicks, is by drawing in people based on their emotions, not logic. Like the market moves based on where money is going. So these two things are completely separate. They're not the same. Humans typically need emotional confirmation before they act. They want to feel good about it before they want to purchase something. You ever notice if you're scrolling on Amazon or eBay or you're looking for something to buy, you tend to have good feelings about it, and that's what, sort of pushes you into making that purchase. Markets don't work that way. Markets move before emotional confirmation exists. By the time you feel safe, prices are high. And by the time you feel scared, opportunity is high. Okay, it's inverse. It's inverse the way that the human mind works. And this isn't by mistake. Okay, buy low and sell high is emotionally backwards for humans. Now, let's take a historical perspective on what buy low and sell high actually looks like. If you remember back March 2009, maybe some of you weren't around for that. Maybe some of you weren't regularly investing, but let's go backwards and take a look at the financial crisis bottom. Okay, the most bearish news environment of our lifetime actually marked the greatest buying opportunity of our lifetime. Okay, if you were around then, if you were paying attention, the news was unbelievably bearish around March 2009. It felt like it was just going to continue to drop. It didn't. That was actually the bottom, and prices went up for 10 years from there. We had one of the biggest bull markets that I know I've seen in my lifetime. Let's go to March 2020. Some of you might, I'm sure a number of you will remember this a lot better than 2009. Look, in March 2020, the world looked like it was going to end. Okay, it was horrible. We were all stuck in our houses, afraid of the COVID virus, and it seemed like things were just going to continue to deteriorate and get worse. That's when the markets actually bottomed, was in March, and the news was unbelievably bearish. But those that were able to overcome their own fear were able to buy at absolute premium prices. And then October 2022, just a few years ago, we had mass inflation and recession fears. Everybody was calling for a recession. But the markets actually started to rally from there. If you were buying assets in October 2022, the right assets, particularly the Mag 7, you're sitting really pretty right now because you overcame that fear and understand that there was a discount on really quality assets. Look, the media makes all of this worse. Okay, fear peaks at the bottom, comfort peaks at the top. Okay, and like I said, media certainly amplifies these emotions and not structure. Headlines explain what already happened, not what is happening. Okay, the story is written after the move, not before it. Okay, so the news doesn't know what's coming. They can only report on what they're actively seeing. Like I mentioned earlier, they're gonna mostly want to use emotion in order to get you to draw in and show interest in their story. That's how they get clicks, not through logic, but through emotion. Let's take a look at what the market is actually telling us. Okay, for the last couple of weeks, we've been doing some Saturday videos. and we're looking at overall markets, look, small caps are showing strength right now. Indexes are near highs, and there's no volatility expansion going on. There's no structural breakdown. And I know I'm making this video right now, and there's news stories coming out. Bitcoin, crypto, because it trades on the weekend, is actually seeing some volatility to the downside. To me, I'm getting more bullish as I see that. I've been basically sitting and watching, doing these videos, and the last thing that I would have been pointing out is that I'm waiting for crypto to catch up. Crypto, Bitcoin specifically, is the canary in the coal mine. Right now, they're showing me that maybe there is a bit more volatility. Maybe there is a bit more uncertainty in the overall markets, but I'm going to get more bullish. Okay. I'm going to do the inverse. I'm going to get more bullish because I'm going to get better prices on assets that I have interest in. And if that carries over into markets next week, I'm going to get more bullish because I know that I'm going to be able to get discounts on good assets. But overall, this is not what market stress looks like. This is what market rotation looks like. Okay, those are two very, very different things. Although they can look similar, but in hindsight, you'll be able to recognize the difference. Rotation is uncomfortable, okay, because leadership is changing underneath. Okay, so we've pointed it out for the last couple of weeks. We've seen it in the tech sector. We've seen large caps or mega caps pull back, while we've had other small, medium, and other large caps get involved. This looks like rotation. Is there volatility in rotation? You bet. But this is why I'm getting more bullish, not bearish, because of what is taking place. Look, most advice says diversify, stay invested, don't time the market. But nobody talks about how markets feel at turning points. Nobody teaches how headlines conflict with opportunity, and nobody talks about how to read structure instead of stories. Okay, that's rarely discussed from a financial advisor perspective. We don't prepare clients mentally; we prepare them logically, which is backwards. People respond to emotion less than they do logic. So it's important to prepare people emotionally, not just logically, instead of saying, hey, just stay the course, we're diversified, everything's going to be fine, which in some cases it is, in some cases it isn't. But it's important to understand the mental, psychological aspect of all of this and how it plays out. How do we make sure that we can stay logical instead of emotional in times like this? Well, my favorite way to do that is to make sure that I have dry powder or cash on the sidelines so that I can get bullish at the right time. If I'm allocated, that's okay. If I have cash on the sidelines, I feel even better because I'm able to buy discounts on the assets that have already performed well in my existing portfolio. Look, headlines feel scary. I understand that, and they're supposed to, especially right now. I understand. But when headlines do feel scary, I want you to ask yourself, is price breaking structure? If you don't know what I'm talking about, go back to some of the videos I've made in the previous weeks, and we actually talk about structure. Okay, we talk about what we're looking for. Is it breaking structure? Is volatility expanding? We have not seen volatility expand in the last several weeks. Could it expand based on some of the news stories that are coming out? You bet. Expect volatility, but what does it do? Does it stick around long term, or is it a 1-2 day spike and then we go back to structure? Is money leaving, or is it rotating within risk? And what we've seen over the last couple of weeks is that it's rotating within risk. If this does sell off going into early next week, I would be betting that you're going to see further rotation into these small and mid caps and other equity positions. Okay. If the answer is rotation, opportunity often lives here. And what I'm seeing currently is rotation. Like, the market uses headlines to move your emotions so that you miss the move. I like to think of things, or at least when I'm looking at markets, as there is a hidden hand involved, right? Assume that there is other players moving things around in the background, moving in accordance with news, impacting overall headlines. If you think from that perspective, and don't just completely believe what you see in the headlines. It'll give you an extra layer of understanding of what is possible and what could potentially be going on. But look, buying low never feels good. Selling high never feels comfortable. This is by design. It's not a flaw. That's how markets work. The people who learn to read structure instead of stories are the ones who finally break the cycle and truly understand how investing works. And if this was valuable to you, please like and subscribe. It certainly helps me get into the algorithm. Check out the links that I'm posting in the comments below. And if there's any interest, please let me know. Thank you and enjoy your Sunday. Take care.